Good afternoon, Scott. After what? Good afternoon. After a long week, a long year so far, a long year on both sides of the coin, whichever way you flip it. If you were a bull, if you were a bear, however you approach the market, it feels as if that it's a lot further along than May. Especially considering the bulls who put out big price targets, including myself, about S&P 1700 by 2015. It seems as if people are emailing me and texting me and saying, okay, you know what, you might get there this year. And a long year for the bears that have been using an opinion, rolling up shorts, and basically saying, okay, at some given point I'm going to be right, and have missed a lot of the moves along the way. The bottom line is, the market is something that you can't really predict. You could have a thesis, you could have a strategy, but then you need the market to confirm it. Even with the bullish stance that we've been taking here for the past few years, starting I think the first time S&P 1700 was talked about in 2012, around 1300 and change, you had to have it confirmed at different points. And now to start 2013, we came in not knowing exactly what was going to happen, but we talk about pivot points, and just to show you how you could have made decisions at key spots. There were a lot of spots that you could have adjusted if you were on the wrong side, if you took accountability, if you said, you know what, maybe I'm wrong here. Let me let the market tell me what's going on, except for, besides my opinions. Because I see a lot of opinions, and as we go higher, I see them getting a little stronger, or a little bit more abrasive, because there are people in pain. There are shorts in pain that have been rolling them up. There are people who have had performance anxiety that have not got involved because they said we have to do something, that the market has to pull back. So even they're upset. So there's just so much frustration, but everyone's making this so much harder than it has to be. Yes, you need common sense. Yes, you can't blindly buy things. Yes, it's been very stock specific. Not all stocks have been created equal, but equities are far from dead, and you have the S&P at all-time highs. And if you've had a macro plan buying S&P 500 funds, whether it was 6 months, 2 years, 5 years, 25 years, you're getting paid right now. You're actually happy. You don't hate the stock market, whereas some who timed it, who sold at bottoms, who chased tops, who listened to brokers, who listened to the TV and didn't educate themselves, yes, they probably don't like the stock market, and they might not ever return, and the market will be here without them. So sorry you're not involved. Anyway, I've been seeing emails from everyone across the sun today and tweets, and I'm rambling a little bit because, as many happy emails as there are, and thankful that they've started the right course. I've been trying to educate them. There's that many more people that, are, think that we're perma bulls, or we're perma this or perma that. We're just perma traders with a little common sense, with strategies, with tactics. So when I came into this year, I was thinking about what inflection points do I have to look out to see if my thesis for higher prices will take place? Will the market confirm it? You go to the chart of the S&P. First little spot. Makes sense, right? 1474 in the spiders. I'm going to go with the, I'll go with the SPX actually, because that's what I've been talking about. 1474, last year's high. You had a gap up to start the year, digestion. We let the 8-day catch up. What happened here when we pushed through 1474? Didn't push through and fell, it pushed through and held. And that ignited a move to as high as 1530. From there, after following the 8-day, we broke it. Who knows what was going to happen here? Who knew if, we're going to get a correction, that the bulls were baited in, that the end of the first quarter run was going to happen? It didn't. We pulled back, tested the 50-day, okay, then rallied back up and digested. Okay, so if you got flat, or you took risk off after a really nice move that we saw from the beginning of the year, or even from the red dog reversal back in November, this was a spot to put back on positions. This was a spot that I put back on positions after getting pretty flat during this, because who knew what was going to happen? And then what happened? Here's your other pivot point. This is 1530, right? 1530 was a prior high. You pulled back, came back to it. How are we going to go through it? How was the market going to deal with it? What took place? Boom. Pushed through 1530, powered higher, didn't fail, didn't push through and fail, didn't do a double top. And what did it do? Led to another move all the way up to this prior pivot. This prior pivot was 1573. It also lined up to the double top over the course of the last decade. From there, what took place? Cyprus, right? Or Cyprus might have been right here, or the jobs report, whatever it was, a little bit of volatility. We broke the 821 day. I think even here, this was a time to take a little risk back off. If you put it back on here and rode it for about a month, spot to get flexible. Then what took place? Boom, took it right out. During this move, some people probably got squeezed, some chasers came in, and then this was your first, to me, this was your real gut check. This was the first time the bears could have done something, because what took place? You had a push through failure through a major level. Okay, we went as high as what, 1597. Then we pulled back. This was a very, very big engulfing downward bar. During this bar, this was what got me to cash. And I remember getting short a little bit right here. And then coming into the 50-day, we're like, okay, what could happen here? Maybe we have a head and shoulders top. Maybe. Okay, maybe you have your left shoulder, your head, right? And then potentially your right shoulder if the bears have control and can contain the bounce. Right? Here was, this move, I think we made some decent money short. Here's where we held the 50-day, held the neckline, and we were talking about how this needed some more time to develop anyway if it was going to be bearish or if it was going to lead to some type of corrective activity, but again, it didn't. Then all of a sudden, took back 1565. This is when I think I got short off the brain, then closed above 1575. Right here is when you saw some of us put back a portfolio approach, not the same type of portfolio approach that I had here, because every time is different. I think I was at 15 longs at this given point. During this move, I think I was 6 or 7. At this particular point, I wasn't exactly sure. I said, you know what, let me go to maybe 4 or 5 longs, okay, and be tactical, because you could still make money and not have a lot of risk on, because look at how far we've come. So PS came all the way up here. This was an engulfing day, okay, on Fed day. Still held the 8-day, still above the 21-day, still above the 50-day, still above. We talked about having a high-level stop around 1577. Did not get there. And then yesterday, rallied up, perfectly set up to break above another pivot here, which was 1597, and there you go. So that has been the story of 2013 from a technical landscape. Talking out of the head of someone who approaches the market with a fundamental thesis in the back of his head, but focuses on technicals and then uses price action, relative strength chart patterns, and a tier system and a formula to execute and approach the market using entries and exits and money management and discipline. I just named a lot of different things. So obviously there's not one little holy grail on how you could actually approach the market, because again, it's different for everyone. Everyone has different time frames. Everyone has different risk parameters and different styles. But one style you can have is an opinion and being stubborn. Those things won't work in the stock market. And you can't think you're too smart for the stock market, because it'll make you feel pretty stupid. And if you look for something cute, it can make you very ugly if you're going against the trend. So anyway, here we are. You're going to see newspapers printed all weekend long about new all-time highs. And I think I've had this type of recap 2 other times where I said if you're on the wrong side of the market, we have a long year ahead of us. Take a step back, take a breath over the weekend, do something to burn off some steam, and come back in a fresh scenario so you could approach the market differently and start to make some progress versus being frustrated and not letting the market work for you. As far as stocks, I have a list of stocks I'm going to go over. I'm going to stop ranting right now. I'm just going to run through and see where we're at. First things first, Apple started acting nice and different, from after a huge decline from 700 all the way down to where we were. Here was your earnings. No one knew exactly what was going to transpire, but remember that it opened below at like 492, engulfed it. Here was your inside day. This was your spot, to put some longs on. This is when I started to get long again for a swing type trade. It traded through 420. And now here we are closing in 450, right by this prior top. Quick, nice move, very similar to the move that we had here, in March when we broke the downtrend, when we reclaimed the 50-day. But remember, after 2 days it failed. This time it broke above it, came back and tested it and was fine, and then continued. So now at this point, a little overbought. It's got to wait for the 8-day to catch up. Been a nice vehicle. Google, best in breed. This was your descending channel, broke above 803, pushed, retested, boom, right through historic highs. Congratulations if you're on Google, different type of trade. My high beta tech stock of the year last year. It's been acting very, very well. There you go. As far as Netflix, ever since earnings, still lethargic, still, not able to break this range. Yes, the market has been stronger and it hasn't broken out. I wouldn't read too much into that. I would be kind of flexible here. A break below 209, maybe you have a bit of a gap fill. A break above 218 on volume, it could potentially continue. As far as LinkedIn, yesterday we tweeted, I said at 200, it gave you the earnings move I would have looked for. If earnings came out here, okay, this was the move from 186 to 200 that we were talking about. At right around 200, I'm like, even if it goes higher, I would trim some. Look at the size of this move. You could always take some up. There's always some risk going into earnings. And whenever you have a huge PE and you're priced for perfection, any kind of miss, this is what's going to happen. So next week, we'll visit to see what happens here. Right now, it's trying to hold the 50-day. It might not. It might see this lower support. We'll see if there's an opportunity there. Right now, you have a big hole in the chart that's going to take some time. It's in the penalty box right here. As far as Amazon, it broke below the 200-day. Remember the rule we talked about? If it could stay below the 200-day for 1 to 4 sessions, chances are it's going to continue lower. If it reclaims it, not that, you have to be a little flexible. And you look at yesterday, it went below it on Wednesday. Thursday reclaimed it. If you were short, that was your time to cover. And some people were looking for a bounce. There you go. So right now it's still monotonous as far as, not showing the most relative strength. As far as being saved, it was saved for now. It's, to me, it's not really that compelling. Facebook is probably off with LinkedIn because of, it doesn't give guidance. And since LinkedIn gave poor revenue, maybe people are thinking Facebook. At this point, it broke above 28. Nice trade yesterday. It was even a decent call spread. You could have followed it on the virtual trade floor. Now, for this to be any good, it should not really get below, maybe 27.60 to 28. We'll look to see if there's some kind of opportunity to buy it early next week, but really it should not have given back the entire day. So I would just have a little skepticism there. As far as mega caps, we've talked about the strength in Microsoft. This is when Goldman put a sell recommendation on it. After earnings, we talked about how these mega caps that give yield, have liquidity, could be great vehicles. Boom. Look at this move that you've had here in Microsoft. Unbelievable, nice little flag patterns, continued all the way up. Intel also, nice move above 22, in a half or 22. Could use some time for the 8-day to catch up. As far as Yahoo on a 2013 thesis, so 25 was a target. It's met it already, and it's only in May. So what do you do when a stock reaches your target? And that's a good concept because every year we go and we write up some kind of thesis for the following year. We did it in 2011, 2012, 2013. So I wrote up in 2013 the 6 to 8 stocks or positions that I thought could make you money on a swing basis. If you wanted to take a portfolio and just take my ideas and wait for the market to confirm them or just buy them, you probably could have done well. Okay, go read it. Go Google Scott Redler 2013 predictions, Google 2012, 2011. We put them out beforehand, and they've been pretty good. Okay, have I played all of them? No. But again, that goes with my role of being an offensive coordinator versus always a player on the field because I do 1,000 things and I'm not always going to be involved. So that's why we say we got to teach you how to fix or to fish. So you can find the patterns yourself, or if you see it on the virtual trade floor, you see it off the charts, you see it on the price point sheet, you could execute it on it, and you don't need me to say, I'm buying it, because I'm not always at my desk to participate. Well, anyway, Yahoo is one of those stocks we talked about that can go to 24 to 25. It's basically there. I think maybe it goes higher. Talked about Boeing, that if it gets above 77, that it could see 85. It's well above that. Reason why we like Boeing, not because I know anything about their 747s or their contracts or this, that. It was just a long channel above 77. The target was into 85, and look at it. It's a 93. Nice move in Boeing. Also talked about how we like Japan. Japan has been the biggest winner. Talked about I needed some exposure in Japan. I'm like, what about Toyota? Looked at Toyota. It's already exceeded our guidance also, or our recommendation. I think I said it can get to 110. It's at 115. And that was to start the year. And to start the year, it was sub 100. So there you go. Lots of targets being met in the first 5 months versus the whole year. Mosaic actually was one of the ags that not quite there yet. I said that this thing could see 65, I think, or something like that. It's actually starting to look a little bit better. Okay, above 62, maybe it goes. To start the year, it was right around here. So not a blockbusting trade, but it's, this actually has a decent pattern. A lot of these ags have lagged. This one looks like it can go. Monsanto's best in breed, that actually is trying to break out here. If this breaks out, maybe it'll help bring this sector. And, Jill always talks about how Monsanto or the ags are a second, third quarter story, so we'll see if that's the case. Also talked about the financials. Bank of America being able to be a $14 to $16 stock or something like that. And right now, Bank of America doesn't look the best, but it's still acting fine. The banks haven't really participated in this last leg of the move. People are saying it and calling it out and then getting short and then missing other action. Big deal. Bank of America still started the year. This was December. Remember, this 995 was a great trade. Okay, then this nice flag pattern. Okay, and then unfortunately it had a big move already. So for 2013, hasn't been the best, cleanest vehicle, but I would say it's still in the game, above 1255. It'll see new highs. I still think on the weekly chart, this thing will get you at least 14 to 1440. Okay, as far as the casinos, last week and a half I had MGM calls on. Finally, MGM actually gave you a really nice trade. Some did the stock, I did the options, the 14 calls that expire next. I just went red on there on my e-signal, just went out. So anyway, you come to me, MGM just had a really nice move. I talked in the last week or two, I think 16, 17 price target. I still think it happened. So there's still a lot of movement that could happen, in a lot of these stocks. But if you're going to be frustrated, if you're going to be upset, if you're going to fight the trend, if you're going to say the market owes me, I have to get paid on the short, you're missing out on a lot of opportunity that happened along the way. And the question is, can you stay solvent until finally you're right? Because at some given point, we're going to have some type of pullback. When? Who knows? Typically, the market will tell us. The market had 3 chances to do so, and each time it was contained. I know in May, historically, it's a bad month, and who knows, today might have been an exhaustion gap, and it could be the pivot high for, it could be a day, 3 days, a month, who knows? But again, the bears can't take the money away from you if you trim and trail, use a tier system, and continue to maneuver around the amount of positions you have, as well as the size of the positions you have. So all in all, there's a lot going on. And I know it's not the easiest. There's been divergences. The volume's been low. You've had your fear mongers out there. You've had everything working against you by listening to people. But if you just listen to the market and you make it a little bit more simple, that's why I call myself a cocktail napkin technician, because I don't deem myself the smartest guy out there. I don't look at all these different type of technical indicators and I need everything to confirm. One thing confirms another, confirms another, confirms another, confirms another. Did I say confirms another? Oh, Darcy's not here. I did say it has to confirm. It doesn't have to confirm another. Just market goes down, your stock holds up, it's acting pretty well, maybe you buy it. Combine that with a nice chart pattern, combine that with a few different time frames, maybe you buy more of it. Same way on the short side. If market goes up, stock's below the moving averages, it doesn't participate in a rally that took place over a week, and you're looking for a short showing your relative weakness, that's the short candidate, not the strong stock. Just tools and tactics that we use every day. And you could use it on any time frame. So, as far as that little article in the Wall Street Journal I talked about, which I thought was interesting, that flying home on a Tuesday, markets at all-time highs, and there's maybe 10 people on a plane watching it versus in 2000 and 2007 you might have had every other seat. It's because, yes, people have been battered and bruised, but there are people who have been putting monthly funds into an S&P 500 fund or contributing to a 401k or an IRA that never veered, that at all-time highs, they're going to look at their statement and say, wow, the stock market made me money. There are going to be people like me on an intermediate basis that tried to ride a portfolio approach that might not have been all in the entire time, but used the system, let the market make me some money, traded around positions, used tactics. I said, okay, I'm having a decent year so far. Yes, do I think I could have been better at S&P 1600? It could always be better, but it could always be worse. So, and if you don't even take positions because you're a little bit newer and you don't like to have overnight risk, that's fine too. There's been guys in our firm that are doing well that way too, but it's just a different style. So there's different styles, there's different time frames. There's a lot going on here. And again, if you don't make adjustments, you're never going to get involved. And if you say the market's not for me, you're just saying it because you're not taking accountability enough to learn how to approach it. Because the market's going to be here, long after us. And it's going to be providing some type of, opportunity for those who learn how to use it. But if you're going to have an opinion, and you're not going to use a formula, and you're not going to take the steps in the right direction, you're never going to be thinking positively about it, and you're never going to get what you want out of it. So as you can see, my summer little do, it's getting close. It's beautiful out. Take some time this weekend, relax, blow off some steam. Just get yourself situated. And if you're happy and you're selling into strength and you're selling into excitement as pros do, congratulations also. You deserve it. A lot of things, or a lot of ways to approach the weekend. But one thing you got to do is you have to enjoy yourself. And for me, I'm doing a half Ironman in, what am I doing? First weekend in June. So that's why I went to a little razor cut, because you have gel in your hair and you go sweat and it gets in your eyes, you get all red and it's not good. So anyway, seasonal. That's what makes me happy, is to do races over the summer, blow off some steam, and that's how I get my balance. And you have to have balance. Everyone's balance is different. Don't judge yourself as a person whether you had a red or green day, a red or green month, or a red or green year. There's so much more than that. And there's so much more in life. This market's here to hopefully help you in your life and not hurt you. And there are things you can control. You can't control the Fed. You can't control the Fed policy. You can't control Washington. All you can control is your keyboard. Okay? Learn how to use your keyboard to your advantage, and hopefully we're here to help. Scott Redler, T3 Live. Have a great weekend. See you Monday morning.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.